Guys, Bill Soriano here from Pittsburgh in my group, Forex Smart Money Trading Academy group. Let's see here. Let me get back in here. So I was live earlier today going over some winning trades and also a setup that I did get in NZD USD. That is this live session right here. So the restaurant's closed this week because of the 4th, we take off. So that's why I'm on here during the day, because as you know, otherwise I'd be at the restaurant. So I wouldn't be able to do these. So I'm just making these little short lives just to go over these trades as they come up. So this is a trade in EURAUD. So again, we're looking at the daily trend, right? So we're going with the daily trend. And if we look at the daily trend here, we see that the daily trend is bullish. So we're using the daily to determine the trend bias. Then on the 4-hour, we're marking up our order block with that trend bias. So we had this order block right here, and using that institutional candle, that red candle there, the last down candle before the push up that broke structure and left the imbalance, right? All good things. Also, it's an engulfing candle after the institutional candle. So we use the open of that institutional candle, that red candle, for our point of interest. Okay, so and that's inside the 4-hour order block. So once that point of interest is hit, we drop down to the 15-minute. Now on this one, you see the price just continued downward all the way to the bottom of the order block. And this happens sometimes because we don't know where price is going to react inside this order block. That's why we wait for our entry model, which is the lower time frame flip. So just to tell you how this sets up, how you have to read the 15-minute structure to determine where to put your choke, and then which is the breakup structure, change of character, and then where to put your limit order to get into the trade. So in order to show you this, and by the way, there was one one trade right here that that could have been taken, that depending on where you put your stop loss, it may have been a loss, right? You see here, and then right after we would have gotten stopped out, price pushed up through our take profit zone here. So that could have been a loss depending on where you put your stop loss. I've been going down, I've been trying to go 1 ATR below the wick there. And so at this point here, the ATR was like 17 pips on this pair. Actually 10 pips, I'm sorry. So, well, let's see here. Price comes down. I don't know how that trade would have worked out because I don't have that mark. That's an old markup, but it looks like it could have lost depending on where you put your stop loss. But then right here, let's just do a replay here to try to see what this would look like here. So we see here that price comes back, right? Price comes back comes back down into the order block and the point of interest line. And sometimes this happens a couple times here. And again, since we're waiting for our lower time frame flip to occur on the 15-minute, we can take these trades if it hits, a few times. After about 2 or 3 hits, you probably just want to let them go. But on this one, let's just play this forward here. So we see here, let's just see what happens here. Price kind of moves down there. So it makes a new low here. So when it does that, when it makes this low here, our change of character would, we would need a breakup structure up here, kind of right above our point of interest line here, to get that change of character telling us that it's safe to set our limit order, right? So let's just play this forward, see what happens. And price just kind of keeps going lower here. Okay. And as you can see, as price kind of bottoms out down there, that moves our breakup structure or our change of character choke right to here. Okay, so I'm just going to get rid of that red line up there. And so this wick now, the top of this wick now becomes our choke, right? Because we have this pullback, we have a move down, the break structure. Now we need that breakup structure to the upside to tell us it's safe to take this trade, right? Because otherwise it could just keep moving down. Okay, so you see price just kind of moving along here, right? And then right there, right here, we get that break of structure, okay? So you can see the body of the candle closes above the red line here. That's our choke, right? That's our change of character that will tell us that it's now safe to take that trade, right? So let's just mark this our choke, right? That tells us it's safe to take the trade. And now we want to identify our order block here that causes that break of structure or that choke. And that order block is this red candle right here. So we see here that I actually had that marked up wrong. So that would be our entry right there. So our entry would be right there at the top of that wick of that. That's actually a down candle. If you scroll this out here, you can see that that's a down arrow on that yellow. So that's actually not a shift candle going up. That's actually a shift candle going the other way. But we got the break of structure here. And so that's where we're going to put our entry to get into this trade. So the entry would go right there, right? And then our stop loss is going to go down here below these wicks. It's about 27 pips. And then in order to get a 2-to-1, you know, we only have to get to right here. Okay, so we could see all this structure over here telling us the price could very easily go all the way back up to here. So this is a trade where we might want to try to get a 3-to-1, but we have to see how it goes. So anyway, this is our entry line down here now. So let's play this forward, see what happens. Okay, boom. You see right here on this wick right here, we get into this trade, and that's at 4 a.m. this morning. Okay, that was 4 a.m. this morning. We're on the 15-minute chart. We get into that trade, and you can see the price immediately shoots right up. It just wicks down there, right? Fills that imbalance down there, enters us into our trade, and then boom. It pulls back a little bit, and then it shoots right back up. And so at this point here, we easily got our 1-to-2. So if we risk 1%, we'd get a 2% return. If we risk 2%, we'd get a 4% return. Of course, if we would have gotten stopped out, we would have lost 1 or 2%. So let's see if this is one where we can try to get a 1-to-3. Sometimes what I'll do is I'll close half the position at 1-to-2, and then I'll let the remaining position run to a 1-to-3. But I can't change my stop loss. If you're going to do this, you have to do it with the understanding that you can't move your stop loss to break even, because a lot of times price just comes back down. After you get a break of structure to the upside, price will come back down to an order block down here, another 15-minute order block. They'll mitigate that candle, and then they'll go up. So if you're gonna want to move your stop loss to break even, just get out at 1-to-2. And you can test this out doing 25 demo trades. But I'm just curious to see, I can't remember. Let me just see what happens here. Price moves back down, and then so it doesn't get to a 1-to-3, right? So it looks like it gets to about a 1-to-2.71, but it doesn't get to a 1.3. Now it could have got to a 1.3 eventually, but in either case, our basic entry here is to get out once we have 2R, once we're at a 2R, right? So once we're up 2 times our risk, we get out of the trade, okay? Now, like I said, could have exited half the trade and let it run to try to get to a 1-to-3, but we don't know what's going to happen there, okay? It could very well get to 1-to-3. We'll check back tomorrow unless something else happens today and I come back on here. But I just want to make these kind of short videos here showing you trades that go off on the 15-minute using our lower time frame flip entry model on the 15-minute, right? Taking these trades from the higher time frame trend and the higher time frame order block. So any questions, drop them down below. Bill Soriano from Pittsburgh. Have a great day.